And yes, the range-bound movement for the equity markets continues. While it does tend to get a little bit choppy intraday, and that was no different yesterday, but we finally settled in around the 24,600 mark. So literally just been dragging our feet for the last 2 weeks.
It may well continue, Aisha, because globally also you're just getting that patch where volatility has got crushed, price action is restricted, news flow has dried up, and there are nobody's ready to take large bets on both sides of the trend. Of course, you've got an odd outperformance which is there in some individual mid-cap stocks. Metal stocks, courtesy with what's happening at a global level, this seems to be doing well. But in general, the market is lacking energy, but that does not mean market is looking to retreat. When the markets are lacking energy, that clearly means that market on the upside also, the price action would really be limited or restricted. I think it's simple template, which is that for markets to go higher, what is the trigger? And for markets to go down, what could be the catalyst? The trigger is missing, the catalyst is not there. So typically it may sound boring, it may sound drabby, you may use the word range bound, but I would say this is classic consolidation which is at play, and it is as per the script, Aisha, because when Nifty consolidates small and mid cap stocks, they party. So outperformance, I think in that genre, if I may use the word, I think is visible. What you may see, Aisha, is that if markets continue to remain range bound where there is no trigger and then there is no catalyst, small and mid cap stocks will outperform, but then the Johnny come lately crowd will start chasing those 2-digit stocks and penny stocks. I think for me that is the climax, and I don't think we've reached the climax yet. But if one looks at the pendulum tick tick from fear to greed, geared to fear, that's classic price action which could be at play in coming days.
Although some signs of that build-up also seem to be taking place, to be honest. I mean, ever since last week, you've actually seen the broader markets outperform. I mean, look at the names that I've been holding out: Jubilant Foodworks, APL Apollo, CESC, Policy Bazaar, RVNL. It's largely the mid and the small caps which have been doing a lot better than what the large cap pool or universe has been up to. But again, one needs to see whether, like Nikunj said, it trickles down to the 2-digit names or not. But yes, the big trigger perhaps could also come in from the MPC meet. While a 25 bips cut seems like par for the course and another 25 in the remainder part of the year, the question is whether that's priced in and whether that's going to move the needle for the market or not. Looking at the GDP growth, the inflation softening, the demand environment, the benign balance of payment dynamic, it seems like it's well in the price so far. So yes, what from the commentary can positively surprise the street?
Okay, rate cut is coming, we know that. Liquidity is strong, we know that. Stance has been changed, we know that. Inflation is under control, we know that. Growth is getting better, we know that. We already know the MPC policy. What is that we don't know? What would be the assessment of tariff? I'll tell you why, because the US Fed in a sense is not ready to commit anything. US Fed is sounding hawkish. The US Fed is careful about the way the inflation is likely to move. If that is the consideration, which is tariff and impact on inflation for US Fed, could that really force the Reserve Bank of India or the governor to be cautious, and could there be a renewed focus on local versus global, where global factors in a sense would be prioritized? I think the mention would be there, acknowledgement would be there. But the tone and tonality, I think, would be more domestic, where there is reason to be optimistic purely based on the data. The governor is just getting everything what he actually wanted. Inflation has got crushed, monsoon has come early, crude prices are lower, the base effect has kicked in, GDP numbers were not that strong. And the other interesting data, Aisha, would be that will there be a revision to GDP? I mean, after that Q4 bumper number, what we got last Friday, could the RBI GDP number for full year be revised, which may well be revised? And the last but the least is that will they be pleasantly surprised on the full year inflation? I mean, 4 to 6 is this band in which inflation has to move. Are we in for a year where inflation goes below 4%? Then that will excite the market.
Well, the big one, of course, has been the record high for the MSCI All-Country World Equity Index, and more importantly, the fact that emerging market equity funds have already seen inflows of about $1.2 billion, managers clearly favoring banks and financials. We saw just day before that the Nifty Bank as well hit an all-time peak. So yes, India also getting a share of this pool.
Yeah, I mean, it's on expected lines, Aisha. I mean, nothing which markets, they tend to adjust the MSCI inclusion way ahead of the actual event. I mean, the actual event is actually marked with the flows which actually happen. But in general, I guess, the MSCI adjustments, they tend to get adjusted. But what is important here is that this entire narrative which was there at the beginning of the year, that India is expensive and it's time to go back to China, that narrative in a sense has got dismissed completely. So from an India standpoint, what really matters is that the record flows into Indian MSCI dominated funds is something which is very, very heartwarming, and it's very encouraging. So the pace of FI activity was strong in May, and last couple of days that has dwindled a bit, but I expect that things in a sense progressively will go only strong. The problem, Aisha, is not the macro, the problem is not the micro, the problem is not stretched valuation. The challenge for the market is that it is lacking any trigger and flows are strong. Because there is no trigger, no new buyers are coming, and existing buyers are very happy to when existing buyers are there, the current supply is getting equalized with the current demand is getting equalized with the current supply, whether it is block deals, whether it is promoter blocks, whether it is IPOs. And IPOs have not started. I mean, we've just had like 2-3 big IPOs.
We've not, big ones have not.
Yeah, I mean, we've not seen a single $1 billion IPO. So I think 2-3 months, one of the startups will go public, a large promoter subsidiary will go public. So those anticipated IPOs have not made the debut. Which was the anticipated IPO of the year? I'm just thinking through it.
None. I mean, nothing comes to my mind.
Yeah, nothing. You've not had a mega IPO, which was like, oh, the awaited IPO, and it just got some crazy response. So my point is that that trend has to play out, and that in a sense is going to be this lingering overhang in terms of the fresh paper which will constantly be hit at the market, and which in a sense would restrict the upside, or some new trigger has to come, which I don't see happening in June.
If you like this video, then like, share and subscribe to ET Now.